Hi, I'm Jeremy Hallett, and welcome to Insurance Insider. Today, we're going to talk about a great and fun topic, divorce. And not great and fun, but it's important for us to have a conversation when it comes to a financial plan about divorce. So, nearly half of all marriages actually end in divorce. And unfortunately, those percentages are even higher for couples who enter into second marriages. Divorce is very expensive financially, and it's intensely stressful emotionally. Plus, there are these added costs to financial strain once there are actually two households to support. Divorce isn't just some life milestone. When it happens, it's painful. It's filled with stress that can be difficult to navigate through. There's personal turmoil mixed with financial turmoil. Each spouse receives a mix of assets, liabilities, responsibilities that are far different than what they each had during the marriage. And these challenges, they can feel overwhelming. But procrastinating can result in hard to solve dilemmas, such as retiring without sufficient resources, losing child support due to the unexpected death of an ex-spouse without adequate life insurance, or dying and leaving assets to your ex because of a failure to change beneficiary designations. So, to avoid some of these potential future issues, it's important to complete a financial review now as a baseline for a new plan. Let's have a discussion about what you should consider during the planning process. Untangling debt. Now, this is an important task, and it encompasses a number of smaller components. We need to sever shared financial obligations, including bank accounts, car loans, student loans, business loans, joint credit cards, and so on. Now, an easy place to get all those? Review your credit report. Just go grab that from your bank and Experian or wherever you're getting it to ensure that you don't overlook any of these debts. Next, revoke your ex as an authorized user on your credit cards or accounts. Again, look at your credit report, make sure that all of that is changed. Third, change your PIN numbers. The odds are your spouse knows your PIN, and you probably know your spouse's. And you probably know the multiple PINs that your spouse may actually have as well. And then also, we need to notify not only our creditors, but Social Security and the IRS of your changed marital status, and possibly actually a new last name. So after your finances get untangled, we need to look at how the divorce and the division of assets affects your taxes and your filing status. So some questions that you need to ask yourself are, will you file jointly one last time if the timing of the divorce allows it? This is actually beneficial, but not always. Who will claim the children's dependents and which payments are taxable? Remember, child support is not taxable. Alimony, there's been some changes here recently, so make sure you talk to your accountant about it. Things are different than they were a few years ago, although you would be grandfathered in. If you already have a will, you need a new will. You need to put a new will in order after you get this divorce. However, a will does not have any impact on who receives retirement assets, life insurance proceeds, or any other asset that requires a named beneficiary. When it comes to a will, lots of times you think, oh, hey, that's going to supersede anything else that happens. No. If your life insurance or your spouse's life insurance has your name on it and not their new spouse or the children or whatever, that's where the money goes. Now, changing beneficiaries, it's not that difficult. It's actually really simple, but it's hugely important. So your ex-spouse is likely to receive those assets if you have not named new beneficiaries. Let's talk about reevaluating our retirement savings. Since your vested rights in pension plans and account balances and defined contribution plans are considered marital property, retirement assets may actually be the largest part of a property settlement. So it's really important to stay on top of these benefits and make any necessary adjustments to keep your savings on track, even when your retirement is years away, 20 years, 15 years, 30 years away. You need to take a look at that. You have a whole new financial plan that needs to be put together. Talk to your financial advisor and take a hard look at that. There's also the Qualified Domestic Relations Order, or QDRO, or QDRO. That establishes an individual's legal right to be paid a specified percentage of an ex-spouse's plan. The distribution avoids the 10% penalty for early withdrawal, which actually then can come in the form of a lump sum or a series of regular payments. And again, since those are qualified plans, of course, those benefits are taxable even though they don't have the 10% penalty tax on top of it. IRAs may be divided by the divorce decree, which involves a direct transfer from one IRA to the other. So if you've lost any retirement assets in the divorce, consider increasing your contributions, supplementing existing plans with a new IRA or annuity, or supplement your retirement savings with a cash value life insurance policy. Now, let's go through some insurance needs and coverage. So life insurance is critical when the family is still in one piece, or it's also critical after a family has been split in two. Now, while some insurance needs remain the same, such as replacing income if one parent dies, providing for heirs, providing estate liquidity, building family reserves for college or emergencies, supplementing retirement plans and Social Security, there are some life insurance needs that change. So, alimony and child support payments. Without life insurance, all payments come to an abrupt halt if the supporting spouse dies unexpectedly, which creates a real difficult financial solution. Also, protecting your children. A newly single parent must reevaluate insurance coverage because protection in the beginning was meant for one household. That may not be the same amount of insurance you need if you have the needs of two households. So, how to reevaluate your insurance? After your divorce, ensure that all your property casualty insurance, your auto, your homeowners, make sure that's all up to date. Make sure it's in the correct name. Make sure that it reflects any changes in residence or other covered possessions. And check that your health insurance coverage remains in place at acceptable levels. Review the amount of life insurance you own may be the most vital task. After all, insurance is even more critical when your family has been split in two. It also may be the most commonly overlooked since none of us expect to die prematurely. Well, life insurance can replace income when a single parent dies early. It can provide legacy for the heirs and ensure needed liquidity to pay estate settlement costs without burdening survivors. Cash value life insurance is a cost-effective way to build family reserves for college or emergencies, or to supplement Social Security and qualified plans in retirement. Now, if you receive alimony or child support payments, life insurance on your ex can protect those payments if your ex-spouse should pass away prematurely. In fact, the courts often require life insurance for this purpose as part of the divorce decree. And if you're in that spot, or you're advising someone in that spot, if you're the one who needs life insurance on you or your spouse, and we're at the moment of needing it within a week or two, there are life insurance policies that can be put in place really quickly. Ask for one of those, pay a little bit more, and if you need to reshop it later, do it, or maybe that convenience fee is worth it to just go forward. It's not very much to go about that. Going through a divorce, it's inevitably emotionally charged. There's sure to be a disruption as you cope with the loss of your marriage. And divorce many times is a path tinged with anger, and sadness, and grief, disappointment, and pain. But it is an opportunity to engage rather than disengage. There are many steps to take before you enter your new normal. And since you may be mentally exhausted, it's really tempting sometimes to ignore these realities. However, when you take charge and deal with the decoupling of your finances, you will feel a sense of power and accomplishment as you begin the road to a new and secure financial future. Nonetheless, when the divorce is finalized, you're in charge of an entirely new and different financial world. And this is your opportunity to engage, not disengage, all right? So there are many steps involved in evaluating and controlling your new financial future. Procrastination, though understandable, is potentially devastating. When you face your new reality and do what's necessary to review and adjust your finances, you'll put yourself squarely on the path to the future. If you are currently going through a divorce or are supporting a friend who is in the process, be cognizant of your energy and make sure to dot all the I's, cross all the T's when it comes to your finances. Go on the internet, get a checklist, talk with your closest allies, your loved ones, and get your finances right. Now, we didn't really discuss children in this conversation. There are much wiser sources than I am to help you navigate the intricacies of children and divorce. But if your finances are completed and they're well thought through, you will have more energy and less stress when figuring out how best to help your children through this time. So I'm Jeremy Hallett. This is Insurance Insider. Thanks for listening today. Please leave a comment below. Tap that like button if you can. I really appreciate all you guys. Thanks.